pay package and voting to reincorporate in Texas. Joining us now, Michael Lee strategy founder, Michael Lee. You're a bull on Tesla. Elon Musk claiming yesterday at the shareholders meeting Tesla in the long run could be a $25 trillion company. Do you agree?
Look, I don't know if it can get to 25 trillion, but I can tell you that Elon Musk has returned more value to shareholders than any other CEO in the same time frame in history. So since Tesla went public, the market's up 400%. Tesla's up 15,000%. Look, when you're investing in Tesla, you're investing in Elon. And so he wants more control of this company. The fact that this was overturned by a court is a little bit suspect, in my opinion, considering how favorable he is to the current administration of this country and the court jurisdiction where this whole thing went down. So I'm glad to see this is happening. I think Tesla's going to go much higher over the next few years. I love driving their cars, and I think a lot of the recent speed bumps they've had as a company just has to do with some pull forward in demand over the kind of excess exuberance for electric cars these last few years.
Mike, speed bumps, I got that. Let's talk about the broader markets, because the indices are trending lower today, but you've still got some of the AI companies that are in the green. And so we sit back and wonder, you know, if you don't want to get on board the AI train per se, because you think it's a little frothy right now, what else can you look at to diversify?
Yeah, so I would look at utilities, particularly the private utilities. If you want to be easy, you could go with the XLU because the energy demand in our country is predicted to start skyrocketing based on AI. So, this is a very, very good sign because the correlation between energy consumption growth and economic growth is like 0.93 over time. And if you look at the energy consumption in the U.S. over, like, say, the last 50 or 60 years, it's really slowed down dramatically since 2008 from a growth standpoint. So to see these predictions come out, this is a good thing for America. Like there's going to be some drawbacks to AI, but on the whole, I think it's going to be an enormously positive economic development. We are the first country in the world to embrace it. It is being reflected in the performance of the biggest stocks in the index, and I'd say the safe way to play that is through utilities.
Mike, you are such a super bull, it's unbelievable. Let me ask you this. Is diversification overrated right now? I mean, why not pile into AI stocks? Why worry about diversifying outside of them? That's where all the returns are.
Yeah, well, look, what I'm seeing in my model portolios is some movement to financials on a risk-reward basis and some energy stocks. But yes, the Mag 7 kind of stocks are doing spectacular, and a lot of that has to do with what we were just talking about with AI. It's very expensive to make an endeavor into the space and to make moves, so the biggest companies are going to profit the most. And yes, we have seen a lot of consolidation at the top. Right now, it's a little bit extreme, but this is nothing new. Technology has led every major bull market for the last 50 or 100 years, and we're simply seeing that now. I'd imagine if we do get a shift in policy this November with the election, you see a much more broad participation in the market. And if we don't, these companies are going to continue to win regardless of the election outcome.
I want to follow on that because we have a great chart highlighting concentration risk. A record 35% of the S&P 500 is now made up of only 10 stocks. Up until that election, is concentration risk something we need to be thinking about?
Well, look, it's always something you need to worry about. And when you own stocks like this, you need to look. What I say you need to look for is a price-to-earnings multiple re-rating. So that typically happens with a sudden shock in interest rates, an exogenous event, or the business prospects of these companies dying down. And I would say if Joe Biden were to win, the multiples on these big companies, in my opinion, would expand because there would be less participation and more crowding into these names, whereas I don't know that you'll see massive multiple compression in these names if Donald Trump were to win, but I think you're going to find other areas of the market that start to participate a lot more with deregulation, with lower taxes, and that sort of thing.
Interesting. A healthening, sort of broadening out of this rally. Michael, thanks so much. Really appreciate it.
Good stuff.
Thanks for having me.